I guess the other key question obviously is where to list, and there's a number of different considerations coming into play here. One of them, looking at the Russian market within Russia, is obviously we've got the MySex RTS merger coming up. I mean, maybe just starting with you, Jochen, how significant is that for both for issuers and investors in terms of how it will affect the Russian market?
We just met Ruben Abingyan yesterday morning, I think, on CNBC. He was very bullish on the merger. In that, I think it's already quite a good stock exchange in many ways. They just have to get some basic things in place, and hopefully maybe one unit will have more power to put in place a central depository system, and the liquidity should become better. One of the key issues that we agreed on is that you really have to get rid of the limits on the convertibility of local shares to ADRs, right? I mean, if you're forcing people to not convert more than 30%, you'll always have local shares trading as a discount. So as soon as he's got the local stock exchange central clearing system in place, and then the liquidity won't escape, we got to get rid of the limit, have convertibility. And I would think that would be a big success, because then people will come from New York and London and trade in Moscow, because why bother stay up until midnight when you can do it locally if you have the liquidity? So, the merger itself, I don't think does a great thing, but hopefully the energy of the new team will bring us finally the reforms that we need.
If I may, one of the things that is always brought up by my investors on our company is about liquidity. And they're not able to invest because of the liquidity side of things. The one problem with the Russian stock market is that there's too much over-the-counter trades. And if you were able to add those over-the-counter trades or make them go through the MySex, the liquidity issue would not be an issue for most of these small enterprises. The problem is, again, investment banks. It's not that I hate investment banks, but investment banks do not want to put it through MySex. They want to do it within their own group. And I think that one of the things for them to make sure that the Russian stock exchange works properly and is thought of as something that they can use is all of those trades must go through the MySex.
And in terms of the option of listing outside of Russia, obviously there's several factors in play here. One of those is, we're seeing Russian issuers that traditionally look to London as the sort of first choice foreign exchange to list on, now going elsewhere. Obviously, Russell's decision to list in Hong Kong. John, do you still see, is there, how does London position itself here? Are there reasons why you still see London as the right place for Russian companies to consider listing if they want a listing outside of Moscow?
Yeah, I don't think it's, I've been at the exchange for 8 years. I don't think it's changed. I think Russian companies still see London as the best place to sort of really have a broad base of international capital. If you look at Rusal and IRC, they do have a good spread of international investors, but compared with London, it pales in comparison. They even don't have a lot of, in the case of Rusal, they didn't get access to the Chinese retail base, which everyone was talking about as the reason to look to China. They didn't even get that. So I think Hong Kong still has some ways to develop in terms of being able to give access to that broader way. If you look at a pie chart in terms of the geographic spread of investors, it's far more limited when it comes to Hong Kong. If you're looking at the Russia case in particular. So I think that's still really why Russian companies continue to look to London. It's a perfect complement to their own domestic market. We've shown that we can work well with the domestic market. Hong Kong still hasn't demonstrated that, where there's sort of good two-way flow. We've got companies where we can point to, despite the limitations, which I hope will one fine day be removed. We have good cross-border trade in stocks such as Gazprom, Lukoil, Novatech as well, and the energy stocks. But I'd have to agree with Jochen. I do hope that they remove those changes. If you look at 2007, obviously there are a lot of intervening things like the crisis, but there were many more Russian IPOs of size at that point prior to the drop in the limit from 35 to 25%.
I mean, I guess the other factor here, we're on a bit of a moving conveyor belt, and I know, none of us can know exactly what's going on, but the trend generally right now seems to be that the largest exchanges are going to get larger, and we're seeing the sort of, tentative M&A activity going on. John, what's the implications for, you've got your blue chip stocks like a VTB or a Lukoil, but for a Russian mid or even kind of almost large cap on a big global exchange getting bigger, that's a mid or a small cap, really. Does that create a barrier that smaller Russian companies are going to look at some of these sort of mega exchanges and say, we're just going to disappear in that market, we're better off staying in our home market?
It's not the first time merger talk has swirled around this London Stock Exchange, and if you look at all previous attempts, the A market was always something that was protected. We realize that it's a very, especially in the German context, when there are talks of Germany, I think, and that's not going to change. We realize that it's a very important, a critical part of our market, sort of addressing that equity gap. And it's something that actually, in marketing in Russia has helped us tremendously. We get into a room where if we just marketed the even GDR or premium, we would have 10 people. By talking up AIM and talking up that particular market, we're able to get more people excited about equity capital markets. So I think merger talk will continue. Mergers will happen. But one thing you won't see happen is us giving up our love for that AIM market. We love it.
I guess, another crucial element here to building a deeper local market is obviously having a local institutional investor base. And I guess insurance and even the pension industry in Russia is still at a pretty early stage of development.
It is still in the adolescent phase of its development. Clearly, the pension reform, which was implemented starting from year 2002, is gradually yielding its results, but the regulation of both insurance industry and the pension fund industry is quite restrictive as far as especially the equity investing is concerned, and it will take again definitely not months but probably not decades, sort of 5-7 years before it comes of age to the point when it becomes the big mover. But already this year we estimate that the pension funds flows contributed something like $500-600 million of inflows into the market in the spring, which is already non-trivial amounts.
And Chris, in the case of your company, obviously so far you've listed purely in Moscow. Had you ever considered a dual listing elsewhere? Are there any sort of particular factors that would encourage you to go down that route, or it's not something that the company needs at the moment?
Well, I think that we're too small cap to go into a London listing as well. We'd be limited to, I think, 15% of our share cap here, and I'm sure that we would just split our liquidity. We're not big enough to approach the pension funds or insurance companies here in London, and the retail sector, truthfully, with Dixon's here and how much problems they've had, I don't think there's much of an appetite in London for consumer electronic stocks. So what we would end up doing is moving some of the shares here, which would be more liquid, and our current shareholders would be buying and selling those ones, and I think that we would have a big discount in our local stock, or a big premium in our UK stock, and I don't think that's good for our company. I think that what we would end up doing is, if we do an SPO, we would want to do it in Russia to improve the liquidity on that side. I'd have two more or less illiquid stocks with a premium in there on one. So for small caps like us, it only makes sense to list on one stock exchange. If you're going to do it not local, if you're going to do it foreign, you do it right away foreign. And I think the issue with that is the compliance issue. Many of the small companies that are out there, they've just started doing IFRS statements. They're building the capabilities to do the types of reporting that investors require. And unless you're 3 years before that ready for it, going to a London Stock Exchange, the compliance rules are quite strict. And I'm not sure that all those companies are ready to meet those. So the local stock exchange is probably the best bet.